Hey, this is Chris Rowe. I'm the founder of True Market Insiders, and I come to you today with the single most important thing that you can know about money management, that there are 3 keys to money management. I'm going to give them to you today in order of importance. The number one most important component out of the 3 is risk management. The second one, which is a close second place, is allocation, so what you're invested in. And the third one is a far third place. You could almost throw it out. It's market timing. And the reason I think this is such an important message is because everybody's been trained to think that market timing is the most important thing when it comes to investing. Buy low, sell high. They think that's the most important thing to focus on because of the movies, because of the media, and it's the most basic thing when you think about it. Risk management strategies have to do with how much money you invest in things, so your position sizing, where you limit your risk, what kind of volatility you're willing to incur, and things like that. Do you have a rules-based system for your investing program, or are you just taking one-off trades? So risk management is the number one thing to focus on. And the second, again, a close second place being allocation, that speaks to what you're investing in. What we do here at True Market Insiders is we use relative strength as the primary tool for figuring out what to invest in, where you should invest your money. So that's allocation, the second most important thing. I've seen hundreds of studies and back tests of models that follow a certain set of rules, and you track that model's performance over time, they outperform the benchmarks, okay? So these models have no market timing component whatsoever. It's all about what they're invested in. So the rules dictate what those models invest in. For example, you might have a sector model using relative strength. And with relative strength studies, you only invest in the top, let's just say 5 sectors out of 41 subsectors, and you rebalance that every single month. So you always own the top 5 strongest sectors. That's a rules-based model. It'll outperform the benchmarks over time. And it outperforms those benchmarks even though it didn't move to cash ever. So it's all about what you're invested in. But third, again, is market timing. It's a nice thing to be able to do, and there's a lot of great tools and indicators out there for market timing. So the what you invest in, allocation, is relative strength. Market timing, you can use breadth indicators. They're incredibly effective, and you can also use momentum indicators that are incredibly effective. RSI is one of the most popular and the most effective momentum indicators. It's usually found at the bottom of your chart by default. You can also use the MACD, another momentum indicator. Internal indicators, the granddaddy of all technical indicators is the New York Stock Exchange BPI, and that'll help you with market timing. And I strongly recommend you look at these 2 different websites that I have that you can use to learn more about this indicator. Again, it's the granddaddy of all technical indicators. Go to majorbottom.com. I know that's a funny sounding name if you think about it, but majorbottom.com, it's just a 2-page website, if you even want to call it a website, and it'll educate you on the BPI. Then another page is truemarketinsiders.com/BPI. So truemarketinsiders.com/BPI, I'm sure we'll pop it up on the screen here somewhere. If you go there, we update that anytime this indicator sends out an important signal. So anytime there's a significant change in the indicator and it's signaling how you should change your portfolio to address the current risk in the market, because the risk changes, right? So it's a risk barometer. It helps you with market timing. It tells you when you should be bullish or when you should be defensive. It's the New York Stock Exchange BPI. Again, it's truemarketinsiders.com/BPI. And if you scroll down to the bottom of that, I started that in the same week that I created majorbottom.com. Okay, so I created these 2 websites together because the New York Stock Exchange BPI was putting in a strong buy signal, an oversold, washed out market. It looked like we were going into a new bull market. And sure enough, January of 2016 marks the beginning of the new bull market. If you scroll down to the bottom of truemarketinsiders.com/BPI, you'll find a video. It's about 8 minutes long. It explains what the BPI is. And that's it. So the 3 keys to money management in order of importance. Number 1, risk management. Number 2, allocation, so what you invest in. And a far third place is number 3, market timing. So that's me. I'm Chris Rowe, True Market Insiders. Thanks for watching this video, and I'll see you on the next one.